The jobless recovery has taken an unexpected turn in the wrong direction. Unexpected is in parentheses. U.S. rents finally take a drop. Economic collapse pending. Hey, everybody. JJ, it is Thursday, December 10th, 2020. Got a bit of news to cover here for you. Let's go ahead and get right into it. We just talked last episode about a central banker that says the economy is going to do worse than expected. Now we have this today. Jobless claims rise more than expected. And this is out of CNBC. Last week, another 853,000 new jobless filings. All right, folks, this is headed in the wrong direction. And we've been expecting this. We knew that this economic recovery, or what they're calling a recovery, is a complete hoax or a farce. And this number that came out last week, or from last week, was the highest number since the 19th of September. And let's go ahead and pull up a chart here. Even when the jobless filings were dropping, this was not a recovery. We're still 3 to 4 times higher than we were pre-pandemic. Now, a large portion of my audience, the consensus, is that these lockdowns are being put in place and are being ramped up in a concerted effort to mask this false economic recovery or the continued economic deterioration. Right? A lot of other people would argue there's a lot of other more sinister agendas behind that. Just talking about financially in the economy, it's sinister enough. Of course, they're going to tell us it's for our safety. But how safe are people once millions of people get evicted, once millions of people lose their homes, when the eviction moratoriums and when the foreclosure moratoriums are pulled out from under millions of people? All right, how safe are the millions of people going to be living in possibly homeless shelters, or worse yet, living under a bridge in a tent somewhere in a tent city? All right, so the search for safety and the quest for the government to quote unquote protect everyone, many would argue it's a bad idea. Others would argue, and these are mostly the people that are in million-dollar homes and people that don't have to work and live paycheck to paycheck. A lot of the consensus for the people at the top are saying we should lock down because it should be all about keeping people healthy and safe. But again, how safe is everyone when millions of people are going to lose their homes? Well, the sad truth is that this economy was ripe for a downturn, as we've witnessed debt explode over the last 10 or 12 years since the previous financial crisis. Household debt is higher. Prices are higher. The bubbles have been reinflated to new all-time highs, including in the stock market. Right? It's amazing how many people still are blinded by the shiny numbers that are put out there, with the unemployment number that's manipulated, the GDP number, which is basically meaningless. And sadly, a lot of the jobs that did return, a lot of times were not very high-paying jobs. And there's another report here that backs up what we've been saying here for a long, long time, that most people are barely scraping by, living paycheck to paycheck. This is another survey of several thousand people, and 63% of people reported living paycheck to paycheck since the shutdown began. All right, there were previous studies that came out that showed a similar picture, about 7 and 10 or 70% living paycheck to paycheck. So we're still right in the same area, but this is a time when a lot of safety programs are going to be coming to an end here in the next few weeks, and that's why I say I urge caution in the next few weeks with these programs ending. And this could take several turns, so maybe nothing will happen, but use caution. If these programs end, I think you're going to see a lot of angry people, a lot of desperation, and could get really dangerous out there. And I read that someone put down in the comments on one of our videos here, I think it was a quote from Gerald Celente, and he said, when people have nothing left to lose, they lose it. When they have nothing left to lose, they lose it. All right, so we see a lot of people in this country are struggling, and a lot of people are just angry. They're angry at the entire system, right? I get it. I don't support anyone going out and hurting anyone or causing damage, but it's going to happen. And if they pull the rug out, if they pull out these safety programs, look out below, because it's going to get really dangerous really quick. But what needs to happen is no more safety programs, no more money created out of nothing, no more fractional reserve lending to keep these bubbles inflated, no more market makers, fiat money bankers, monopoly men, puppet masters, no more intervention in the markets, no more buying bonds, ETFs, stocks, no more rigging the interest rates to be artificially low to keep the bubbles inflated, no more propping up the banks that are loaning out way more money than they have in reserves. Let the markets deflate, let prices come down, problem fixed. No one needs bailouts when you let the market function. If people are making less money, if people are losing jobs, well, landlords have to lower their rent because people have no money to pay the rent. Rents fall, problem fixed. Home prices fall, problem fixed. The cost of living is supposed to adjust based on incomes, not on endless creation of funny money created out of thin air by a select group few of bankers that make the decisions for millions of people. All right, next. Speaking of the cost of living, well, rents are finally dropping, and this is with millions and millions of people not paying their rents. Imagine how these prices would be dropping, how much rents would be dropping if people were allowed to be evicted. Well, this is out of Apartment List. This is a recent rent report here. It just came out, looks like about a week ago. And we see that finally this year, and this is the purple line, rents have now dropped over 1%. Now, that may not seem like a big deal, but if you look at the previous 2 years, rents were up about 2 and 3%. So instead of rising by 2 or 3%, rents have now dropped. And this is nationwide, so this is I believe this is a median. But again, imagine how much more rents would be dropping if they would just allow natural market forces to play out. Right? Rents could be half, rents could be 25% of where they are now. Right? Because it's supply and demand. If people do not have the money to pay the rent, rent should collapse. But market intervention is preventing true price discovery in a lot of different areas, including rents. But here's some of the cities with the bigger rent drops, and we did see a lot of people escaping some of these higher priced areas. San Francisco, rent growth down 24%. Seattle down 19%. Boston 18%. New York City down 18%. San Jose, California 14%. Washington, D.C. 13.7%. Oakland 13%. Arlington, Virginia 12.6%. Minneapolis, Minnesota 11%. Chicago down 10%. And this is just since March. And even with these huge price drops in some of these areas, rents are still too high. San Francisco is still $2,300 a month. Right, I look in some of these more expensive areas, and especially a lot of the apartments, you see just cars everywhere. You can barely park on the street because there's so many people packed into these small apartments out here in California anyways, packed into these tiny apartments like sardines. It's absolutely crazy. Right, so people are paying thousands of dollars a month for rent to be packed in a small apartment. Right, the cost of living is absolutely insane. But something big is going to be dropping here, in my opinion, in the next month and a half. I'd give it 6 to 7 weeks maximum. And this could go many different directions, but it's likely not going to be good no matter which direction it takes. Deflation would be the best thing to happen, in my opinion, even though that would be painful. It'll ultimately be the solution. There's going to be an adjustment period if prices do drop, and you're going to see a lot of pain and a lot of devastation. But we've got to continue to prepare. I would live cautiously right now, both financially and safety-wise. I would also hedge against the possible inflation, because if they keep these bubbles inflated, you could see prices start going back up. They could extend these moratoriums for another year. You know, we don't know. In a manipulated market, nobody knows except for the manipulators. All right, the string pullers, those are the only individuals that know exactly what's going to happen. Right, and that gives them and their cronies a little bit of an edge, because they can bet and front run the Fed. You probably heard that term. You can front run the Fed if you know the market's going to be propped up. You invest based on what you know the Fed's going to do, and that gives a lot of people, or gives some people, I should say, a very unfair advantage over the rest of us who are just kind of have to digest all this and try to figure out the best way to prepare. But thank you everybody for watching. Stay well, stay safe, stay prepared. Bye for now. Peace.